Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Monday. I hope you had a good weekend out there. You know, been a little chilly here in the Valley of the Sun. We've had rain all week. Well, not all week, but like every other day, winds. It's kind of nice. I'm not going to lie because, we all know it won't last much longer. The high country, a lot of snow, people going skiing and Flagstaff and all of those other cool things that, well, let's face it, won't be cool much longer. I'm not ready for summer to begin just yet, but I know it's just around the corner. It's March Madness, right? Did your team get in? Did they not get in? Did they get snubbed? You know what? I'll be honest. Don't really know. Have no idea. I haven't been watching college basketball. You know what? It's just like all of it. You know, we had dinner with our son the other day, and it's like, I didn't watch pro basketball, pro this, pro that. You know what? Maybe the Diamondbacks. That's my new hope. Maybe they'll be really good again this year, and I can get into something. But I'll tell you, there's just way too much going on in the world, but we're going to bring you up to speed today. Our toll-free number, 800-951-0592, the website at allamericangold.com. And unless you live under a rock, gold's $3,000 here this morning, right near, this would be an all-time record high close, but right near the all-time intraday high. The intraday high was, I think, 3,005, as everybody and their mother pours into gold. But it's not the mainstream. This is something where you have, whether it's central banks, sovereign wealth funds, actual banks. Think about, gold is a tier one asset. What does that mean? What's a tier one asset, Joe? We don't know. What is that? Well, there's treasury bonds. They're considered a tier one asset. But, the funny thing is let me ask you, how many people, honestly, would you rather have treasury bonds or gold? Which one would you rather hold? But a tier one asset just means, hey, this is a couple of things. Number one, it's very safe. Number two, it's easy to liquidate, right? That's the thing. People remember the stories, Jason. Gold, it's so complicated, and where do you sell it, and all this? It's just nonsense, right? Listen, selling your gold is easier than you trying to sell out your IRAs or your 401ks. The amount of paperwork you have to do, it's kind of funny. But as the prices continue to rise, you know what? More and more people, hey, an ounce of gold isn't affordable anymore, right? It's just, you think about how many people don't have $1,000 in emergency savings. Well, gosh, how many people don't have $3,000 in an emergency savings, right? You're probably talking, 80% of the country, right? That's kind of what we're looking at today, but it's going to be a busy week. We've got the Fed this week, so Fed meeting coming. It starts tomorrow. We'll hear about it on Wednesday. Obviously, they're not going to raise rates. I think they're going to be what they're going to be is, we're waiting for clarity, tariffs. We think inflation still contained. We may even hear some rate cutting stuff. And my guess is we'll probably start to hear more about the end of quantitative tightening as the government has at least gotten room to spend till September. There is no increase in the debt ceiling, so that still isn't done. But Jason, as we watch this week, like I said, we got retail sales today, which, by the way, not a good start to the year, but we'll get to that in a minute. But what will the Fed say this week? And I think what's happened over the last couple of weeks, I think a lot of people now are expecting a much softer Federal Reserve this week.
I think that sounds about right. Things are moving more comfortably to a rate-cutting situation. It's just magic how it just happens. And they have the time frame, right? I think they know when they're doing stuff. I think months ahead of time. They just they have to protect very specific individuals. That's privileged information. It's why we always get lagging information. Why in this day and age do we have to have lagging information? Why can't they come to the meeting this week and just say, okay, this is exactly where we're at today? Because that doesn't that creates an ability for people to react in real time, and they don't want that, Joe. They need you to make mistakes because they know when they're going to lower the rates specifically or who's going to buy what at what time. And I think what you just said is pretty much right on. I think we're going to see the end of quantitative tightening. But what I get the feeling they probably knew this months ago. They knew months ago. Right, yes. But we got to let the markets know. By the way, Forever 21, not forever. They are going to liquidate now. So they had filed bankruptcy last year. They announced today that they are going to liquidate. They got, I think, 350 stores still left. Johns Hopkins laying off 2,000 workers. I don't know, that made Jesse Waters mad. Apparently his sister worked at Johns Hopkins. They got a lot of money to do research from the government. So this is going to be these things, right? These are one of the next things we're going to worry about. What is the tentacles of all of these government cuts? And we're starting to see some of them now trickle in to places where a lot of you are like, oh, guys, why would Johns Hopkins have to cut 2,000 people? Well, that's because the government was paying for it all. Patriot Radio News Hour will be back after the break. 800-951-0592. Joe and Jason on this Monday, and we got retail sales out this morning. Not really good. So the headline number, retail sales, this is a February number, was up 0.2%. They were looking for 0.6%. But remember last month, right? Negative 0.9%. Apparently, that wasn't low enough. It got revised down to negative 1.2%. So, had retail sales stayed where they were, we would actually have back-to-back negative prints. But how do you get a positive 0.2? Well, take the previous month down 0.3. So, kind of a Not a very good 0.2. And then when we look kind of deeper into the number in February, food services and gas stations saw the biggest drop. Gas stations, we kind of know, right, if it gets real cold or gas prices fall a little bit, right, their sales will go down. Food services, a little concerning. That's another one of these signs. Is the consumer pulling back on spending? The one bright spot in all of this. So, by the way, seasonally adjusted retail sales down year over year. Non-seasonally adjusted sales, guess what, Jason? Down year over year. So when you really think about inflation, even if it's at 3%, to have sales, flat to down, it really is a sign of what is happening. But I said there was a bright spot. The control group, which they said is used for the GDP calculations. I got no idea what's in this group, but it was up 1%. What's hotter than expected? Now, of course, it was down 1% in January. But I guess, Jason, this was a report that I think the Fed, again, can be cautious
and actually talk about, forget about talking about rate hikes. They can talk about, hey, we may, times are uncertain, but if things get any worse, we can start cutting at any time. We've had emergency meetings before where they do it. They don't have to do it right on their meeting dates, right, Joe? We've had plenty of times where, we have the emergency. It makes it much more dramatic, right? Things got so bad in between meetings. We got to drop the rates immediately. So I think we got a good shot at that, right, Joe? All it takes is one of those things in the news media that panics everybody, and suddenly they have an emergency meeting to drop the rates, right, Joe? That seems like it would be more acceptable than, because think about it. There's so many people out there now that the financial shows that are talking about, well, we shouldn't drop rates because of the inflation. There's a lot of people that seem to have more information about this than ever before. And it's going to have to take something more to be accepted. It might take something a little more radical in the news feed, right, Joe? That's what I'm wondering. We'll see if it's that, or if it's just simply we're going to lower the rates and we're going to make Trump happy and move in that direction. I don't know, but if the markets are going to crash and burn and job losses are going to stack up, then that's where we're going. It's going to be print, right? Print that money.
Yeah, and then the New York Fed, their manufacturing index negative 20. That was much worse than expected. Trump's top economic advisor, Kevin Hassett, he was out on TV this morning. Again, we're trying to hope for some clarity on these tariffs. Again, more tariffs starting on April the 2nd. We didn't get it. He said that absolutely between now and April 2nd, so it's just 2 weeks, there's going to be uncertainty, and said that they aren't going to release the plan. Like if they knew what the reciprocal tariffs were for April 2nd, just tell us today, right? Tell us what they're going to be. Unfortunately, it looks like they're still working on it, which probably means more tariffs than what people are expecting. And I'll just say, I guess, any day you don't hear Donald Trump mention the word tariff, I guess that could be considered a good day. But right now, the Wall Street's mixed. The Dow's up 200, but the NASDAQ is down. The 10-year note is down to about 272, and I think for Wall Street right now, bad news is good news again. Retail sales not great. Empire Manufacturing terrible. Yeah, we like that. Let's hope that the Fed gets dovish with us. Right now, gold's up $8 right now, $29.95. Silver pretty flat here, $33.60. But Jason, Scott Bessent where was he yesterday? I forget where he was talking yesterday, but I do like this. It seems like our new Treasury Secretary has a propensity right now to be a little more truthful than others. Now, this is usually what happens. Remember when Jay Powell was first at the Fed? He'd stumble all over himself and tell too many truths. Scott Bessent right now may be on that. Here's what he had to say. What I can guarantee is we would have a financial crisis if we don't figure out how to rein in spending. I've studied it. I've taught it. And if we keep up at these spending levels, everything is unsustainable. He was talking on Meet the Press yesterday, where we are resetting, we are putting things or trying to put things on a sustainable path. And Jason, I think that's the problem, right? I think this is a big problem for Wall Street and probably a big problem for Main Street because he's just laid it out. Guys, we cannot keep doing this. We've got to figure out, and we know their plan. Their plan is we've got to grow even faster. We got to have, really what it says to me, we got to have more inflation. But essentially, he's letting everybody know there's a financial crisis coming, and it's a certainty. And I hope this plan that we're going to do is going to work.
Yeah, well, yeah, what just sounds like is they're getting ready for the storm ahead, right? Batten down the hatches, right? That whole thing. I think a lot of people are going to miss that message, Joe. I just, I don't think people are paying attention. I hear it's almost ridiculous talk about what's getting ready to go down, and people are thinking things and not involved in the reality of the situation, and so batten down the hatches. That's what gold and silver is about, right? Batten down the hatches, right? Get ready. And this is why gold's selling so well right now. It's not selling so well with the smaller buyers, but the bigger buyers are just scooping up loads of this stuff, Joe.
Well, listen, it's very simple. I've said for years, be your own central bank, right? Having money in your bank accounts. You know what? There's a great video on allamericangold.com today, down near the bottom. It's about 10 minutes. Listen to it. We're talking about unsecured losses in banks. Do you know it's $500 billion now? Do you know that that's more than what we were at the financial crisis? They've just allowed the banks to get away with it differently. Do you also know, just so you know, remember the bank problem bank list? Now, they're going to tell us who's on it, but they just won't say the assets, which means some big banks are getting ready to go on it, right? That is obvious. But I want people to know this. Silicon Valley was not on the list. Right? Remember Silicon Valley a couple years ago when they were not on the list? Signature Bank was not on the list. They weren't even on the trouble bank. What's the point of having the list? The banks still haven't paid back the FDIC from all the money they had to borrow to bail out those two banks. 1% of all deposits is actually insured. That's all there is. 1%. Are you willing to risk it? This point, listen, it could work. It could. History says no. I wish it didn't, but that's what it says. History says no. Are we going to avoid a recession? I think it's plainly obvious that we won't. Why do I say that? Well, look at what Donald Trump and Scott Bessent keep saying. Well, we don't care about Wall Street. When Donald Trump was flat out asked about a recession, well, I don't like to guess on these things, right? These are things that tell you they already know. They already know. Now, their hope is that it won't be that bad and we can quickly turn it around. I don't think so. That's usually not how it works. I wish it did, but when you have these the bigger the debt bubbles are, the harder they are to come out of. That's just how it is. Remember, we used to have like little run-of-the-mill recessions, they weren't that bad, they weren't that deep, and now they just get horrible and more horrible and more horrible. I hope you take the time and get more diversified. Be smart. Just be smart. Listen, I'm going to say this. I think gold and silver are just in a win-win scenario. It really doesn't matter. The United States just falls to hell in a handbasket, right? Everyone's getting fired. Gold and silver win. The United States comes roaring back as they unleash huge tax cuts and spending. Gold and silver win. So why not take part of that IRA and put it into a gold and silver IRA? Why not? Just in case. History is right again. Which is, we're going to have a significant sell-off. I mean, did you see what Warren Buffett just did this weekend? It's bad enough he's dumping U.S. stocks. Matter of fact, he's putting his money anywhere but the U.S. Now he's selling Berkshire Hathaway real estate. I think they were the largest real estate company, right? You know, they sell more homes than anybody. He's dumping it. I think this tells you all you need to know. Take care of yourself because nobody else is going to. Does this mean that, but I voted for Donald Trump. You're not abandoning Donald Trump. You're just being smart. Listen to what they say. When's the last time you heard a Treasury Secretary talk about we don't care about the stock market? What does that tell you? Why don't you care? Well, because I don't think it's going to go up. That's why I don't care. I don't think it's going up right now. Talked about he is certain that if we didn't do something, there is going to be a financial crisis of epic proportions. Remember what Ray Dalio said? Remember Ray Dalio last week? What did he say? It's imminent. There's no guarantee that what these guys are trying to do is actually going to work. Most of the odds are not in our favor. I wish they were, but they aren't. 800-951-0592. Gold's up 10, 29.97. China laying out, they're going to ramp up the spending, just like everybody else. But now they want domestic spending. By the way, in China, retail spending up 4%. That's not good enough. They are now going to increase pensions, increase wages, as well as a bunch of other initiatives to get the consumer to spend even more. And Jason, this is another reason why we're seeing gold doing what it's doing. It doesn't matter what decision these governments make. Look at what Germany decided. Screw it. Let's just spend, right? Screw it. Let's just spend. Here in the U.S., what are we trying to do? Well, we want to extend these tax cuts that were supposed to expire, and we want to spend. So we need to cut down the government, and we got to whack them with theirs. You know why Trump's economic advisor says, hey, listen, we don't have clarity yet. They need the tariffs. That's a big part of the plan. That is the plan. Are you not tracking? It doesn't, listen, here's what it doesn't look. Here's how it doesn't work. Tariffs today, I move to America tomorrow. Doesn't work that way. You guys know this. Come on, you know this. Get prepared here. I've got 75 $20 gold pieces, and it's going to be a big sale today. So right now, $20 gold pieces. Think about this. Gold's $3,000. They're $31.95, which would be an incredible price. $100 off. $30.95. 20 or more. $30.75. So less than $100 over spot. Buy 20 or more. What are you talking about? Like $80 over spot, $75 over spot at 800-951-0592. And you can see, right, premiums are up now. Remember, we were, what was it, about a month and a half ago, we could get down to spot. Can't get down to spot anymore. But this is, I mean, think about this. What an incredible opportunity when you're thinking about, buying gold. Let's just say you bought one. I mean, this close to spot, it's just incredible. I mean, you're talking about like 3%. It's nothing. Heck, gold eagles cost more than that. That's cost. Most gold costs more than 3% over the spot price. You buy 20 or more, Jason, you're down to like into the twos here for $20 gold pieces. 800-951-0592, and these ones. Nice looking, lots of dates, lots of varieties. So take the time, continue to add here. Continue to get more diversified. Remember what our good friend Jeff Gunlatch said. I'm laughing at all these people, raising their gold forecasts and talking about $3,000 gold and $3,100 gold and $3,200 gold. He goes, it's already there. Gold's going to be $4,000, and then the only question is, how long until it's $5,000, Jason? I mean, that's literally what we're talking about.
And over the course of time, things move in percentages, really. And so if you look back in the early 2000s when gold went from 300 to 800, right? Well, that's like gold going from 3,000 to 8,000. And it happened in just a couple of years, right, Joe? I don't know, what was it, 300 in 2002 maybe? It was still $300. And then in 2006, it was 1,000, right? So in 5 years' time, we could be looking at $10,000 gold because as a percentage, the money printing doubles over every 10 years. That this is a formula that's put into place, and
they don't say it out loud, but that's what they've done. That's what they do.
And so gold going up will do the same thing. It'll go up as a percentage. So when we have these eras back in the past that we can look at, you just look at the history. When gold has these large upticks, in price, it will happen again. And we're kind of sitting in that position, aren't we, Joe? The 9/11, post years of 9/11. Well, I guess we're in the post years of COVID now, right? A couple of years after COVID, suddenly gold goes from, before COVID, it was, $1,250, right? It was $1,300 before COVID. It zoomed to 2,000, sat there for a couple of years. Now it's zoomed to 3,000. That's going to zoom to 4 and zoom to 5. Nobody wants to say, people that have been doing gold a long time, well, it'll be 4,000 this year, but it very easily could be 4,000 this year. That's a level that could just be blown by really quickly. And it's going to be painful because everything else is going to go up in price. People are complaining about the price of eggs now. Well, wait till you see 4,000 gold. And then we'll see what the price of eggs are, right, Joe?
Well, man, eggs are so expensive. I don't even want to talk about it. But I'm just so people can kind of understand the situation maybe a little bit better here. When we're looking at what's happening in gold, people say, well, is this like the financial crisis? And then I'm going to tell you, no. I mean, the financial crisis, gold doubled. That's what it did. This is probably more like the 80s. What I mean by the 70s. Gold went from $42. Right? Remember the Treasury values gold at $42.22. Right? Why did they pick that number? They didn't pick it out of thin air. That just happened to be what gold was trading at the day they decided to put the value on it, like 1971. It went to 800. This is the type of move we're going to see. Why? Why am I certain? Well, you got to remember, we've been piling on the debt now for 55 years. The first 25 years, they acted like they weren't, and gold fell. Gold's just catching back up. We got 25 more years of spending to go to catch back up. This is why people are really talking about numbers that even I don't like to mention. I don't like to talk about it. I think it's coming. Get these 20s run to the phone and get them locked up here. 800-951-0592. The S&P's gone negative now. The Dow's given back about half of the gain so far. We'll see. Right now it's up about 120 points. Gold's up 11, 29.98. Remember, we've got the Fed meeting this week. How dovish is it going to be? Obviously, any confirmation right now, we're being told that the Fed is looking to end quantitative tightening by the summer. Obviously bullish for gold. You start the Fed to talk about uncertainty and the potential for them to have to act quickly to cut rates. Because I think that's probably going to be the message. I think you're going to, the potential anyway, Jason, is for us to get a very dovish Federal Reserve this week, which then, again, sets up for even, higher gold prices as a lot of people are talking. Remember, this is something Scott Bassett and Donald Trump have talked about, right? We want lower yields. We want lower yields. Why? Because we know what we're going to do is going to hurt. We need lower yields, and a weak dollar policy could absolutely be coming to the United States. Now, that unfortunately, that makes inflation a little worse, but at that point, I don't know that we have much of a choice, but it definitely seems like this is the setup that we're going to have, that the policies that we need, and again, I think the Treasury Secretary is making his case. We had to do it. Why? Because it was a guaranteed financial crisis. We've got to choke off government spending somehow. We've got to get revenue somehow. And I think both of those means we need more cuts, and a lot more than people are thinking about. Here's the reality. The Doge headlines were nice. Weren't they nice? They didn't find $1 trillion. Hell, they didn't find $500 billion. They didn't find $200 billion. They didn't even find $100 billion. We're not even at $100 billion. Yeah. That means a lot more people got to get fired. It's true. Has to happen. We got to stop spending. John Hopkins got to lay off 2,000 people because we aren't funding research for whatever, who knows what it was. On top of that, how are we going to raise revenues if we're going to cut taxes? Well, we're going to tariff the hell out of everybody. Because it was guaranteed. The problem is, and what the part that he can't say out loud, I don't know if this is going to work. Right? He can't say that. Right? He can't say it. We're hoping. Don't allow for your money to disappear. Remember the financial crisis. I can't tell you how many phone calls I took. So what? Your 401k, your IRA is down 10%. That's nothing. That is nothing. Don't let it be down 30, 40, heaven forbid, 50% again. Take part of it, get it into gold. Do not, under any circumstance, leave money in your bank accounts. What are you doing? $500 billion in unrealized losses. How much longer can unrealized losses go? Uh-oh. All right, so got breaking news. Just happens fast. President Trump now saying that any future attacks by the Houthis. Okay, that's Yemen. Right, we've been bombing the Yemen for the last 2-3 days. How much silver did we get rid of in the last few days? I don't know. But listen to this. Iran will be held responsible for any attacks by the Houthis. Jason, I think that's going to put a lot of pressure on oil prices. Any strikes on Iran, because it sounds like what Trump is saying is, hey, if bombing the Houthis isn't going to work, we're going to start bombing Iran if they launch these attacks. If that happens and bombs start flying in Iran, there's going to be a massive move, probably in the gold price. And unfortunately, I would imagine Wall Street probably won't view that very good. But maybe they will, because at least that means, hey, even more spending.
It will be more spending for sure. And let's just while I was watching it, they're not bombing Yemen, they're bombing the Houthis. They notice the language. They're bombing the Houthis. Never mind that it's in a sovereign nation of Yemen, and now with what you just read on the air, okay, well, if the Houthis send one little rocket towards Israel, then it's time to bomb Iran, and this on a Monday morning should not be met with a lot of happiness in the markets. We'll see what happens. Of course, I guess with the markets, maybe they go up because the military-industrial complex might be revving up here, and like you said, more spending, Joe.
Yeah, they may need more than $8 billion more in defense spending if this is going to hold true. $20 gold pieces. $30.95, 20 or more, $30.75 at 800-951-0592. Gold's up $12.29.98. Much higher is it going to go? Nobody knows, but we'll be back to tell you about it right after the break. 800-951-0592. Donald Trump saying now Iran will be held responsible for any further Houthi attacks. Crude oil, well, as expected, it's gone higher. Gold's up $13 here, getting ready to break 3,000 here, $29.99. The Dow's recovering a little bit here. I don't know if that's the reason, but now back to almost up 200 points on that breaking headline. But again, take advantage. I think that, a lot of people are caught off guard because they're like, oh man, look at this move. There's got to be this pullback, and people think, well, remember he got to almost to 2,000, then went back to 1,000, then went back, right? The thing that you got to keep in mind is back in 2011 when that kind of happened, when that went down, they still had faith that maybe things weren't past the breaking point. Think about how much debt has been added since then. And now you've got the Treasury Secretary come out on Meet the Press yesterday and say, listen, it is guaranteed financial calamity. Guaranteed. We got to try something. And these tariffs, today, Trump's economic advisor, they're coming April 2nd. And nope, we're not going to tell you because there may be more than what people anticipate. And Jason, again, it doesn't matter. Whatever outcome happens, gold and silver are the winners here. This is why. Why is there record gold demand from all of these things? Because they know. Listen, we have to speculate. We don't get all the reports. We don't get all the details. The central banks do. 81% are adding to their gold holdings within the next 5 years. How many are going to sell in the next 5 years? Zero. 81 to nothing. That's all you need to know. 800-951-0592. 0, 5, 9 to $20 gold pieces 1 through 19, $3,095, 20 or more, $3,070. Gold's up $1,350, $29.99 right now. And Jason, like I said, 3,000 really, it's not a technical level. It's more of a psychological level. But we get a couple of closes above 3,000. Chances are it could go very quickly to 32 before we maybe get some more consolidation. But remember, it's all about the Fed. Fed, tariffs. Will we see any attacks on Iran with Trump's statement this morning? I think now all of a sudden we've got 3 big drivers this week at a minimum, and it's only Monday.
And silver's sitting there real happy above 33 now, so watch out. We'll probably have a silver special before you know it, and get ready.
Silver's right now $33.70. $33.70. Not even thinking about doing that. And again, I think you're right, Jason. Silver, listen, they're both going to go. The question's going to be, how high is it going to go? And I'll just say it this way. I think Wall Street's going a lot lower than most people think. I think gold and silver are going a lot higher than most people think.